Toronto real estate is probably going to be slower for the first part of 2023. We expect more price drops, especially in the weaker markets, since major rate hikes didn't really kick in until the end of 2022. And even though more stable markets might recover more quickly, prices aren't going to shoot up because demand is going to be slower when interest rates stay high and borrowing stays tough. But we do see good growth potential in the low-rise market in Toronto for at least the next 5 years, and it's actually looking really strong. If you want to learn more about this, stay tuned because I'll be going over this coming right up. This is a heads up that you can get our complete Toronto real estate investing guide for free on our website. You can see things like a breakdown of typical costs, rents, appreciation, sample financials that you can change up to see how it affects your returns, and even try out a quiz to see what might fit you best. I'll put a link to the free guide in the description below. Don't forget to like this video and subscribe to our channel so you don't miss other content like this made just for real estate investors in Toronto. From the latest 2021 census, we see that 48% of the Toronto population is now a renter, which is up 1% from 2016. Now, this does seem like a small step up, but with just 2 data points, it's really hard to see what's going on. But it does get clearer when we stack the 416 against the GTA. Compared to the suburbs that have more end users, it's obvious that the 416 do have a lot more renters. Now, we do have a big pool of renters compared to the GTA, but if we compare ourselves to more global cities like Chicago, New York, or LA, it does look like we actually have more room to grow. Chicago has 55% of their population as renters, and both New York and LA have 63% of their population as renters. The reality is that as we become a bigger city, home prices are going to be more expensive, and that's going to funnel more people to become renters. Here are some more stats for reference. Home prices have been going up much faster at 10% per year from 2005 to 2022, which makes rent growth look slow even when it's very high at 6.6%. So even though rents are growing quickly, it ends up being the more attainable housing option, and that's why the renter pool will continue to grow in Toronto. Our city definitely sees this too, so it looks like their affordable housing mandates are going to focus on the rental side moving forward. Right now, around 7.6% of Canada's population live in Toronto, and we expect more people to come into Toronto because Canada's immigration targets are around 500,000 people per year until 2025. And so Toronto is now targeting a creation of 285,000 new housing units over the next 10 years. But like I said, Toronto is going to focus on affordable rentals and address the uneven housing density that's developed over the past 10 years. Here's the thing. We've seen growth in Toronto's housing supply, but it's mostly been in condos. So what's happening now is that downtown has been seeing higher growth in population and density, and neighborhoods with houses are actually seeing the opposite. In fact, single-family homes take up a lot more land, but only make up 35% of housing units in Toronto right now. And in many areas, the population is also dropping because there's more empty nesters who probably also have a cottage or second home somewhere else. So these uneven trends is why Toronto is going to focus on allowing single-family homes to turn into multiplexes, and they plan on having this new change effective as early as March of 2024. In the long run, the fundamentals do look strong for Toronto. Population will be growing, and so housing will continue to be crucial. But because the city is focusing so much attention on the low-rise homes, this is the market that's probably going to see an outperformance. As we see more renters, what we expect is that home prices will start to track rent growth more than before. Take a look at this. If we have a condo that sees modest rent growth and modest expense growth at 3% per year, then that would translate to a 3% appreciation per year in condos if investors are looking for a similar cap rate. The game changer happens when you do see a rent bump, and that's going to be highly dependent on government policy. If a house can be converted into a multiplex, then rents can get a bigger than normal bump up. And so prices can go up more quickly here too. And this is precisely why we think the low rise market will see the best growth potential for at least the next 5 years. We love to talk real estate investing in Toronto, and if you're new to this and want help getting started, just reach out to our team. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto, and here's how it's like to work with us. First, we'll do a discovery call with you so we get to know each other more and help you get your financing ready, and then we'll teach you how to analyze deals. Once you're set, our sales team will work with you to find the best opportunities on the market and eventually help you buy the best one for you. Houses typically need a bit of renovations, and we'll help you with a detailed scope of work and contractor connections. And then once you're ready to rent out the place, we also have leasing and property management services if you need it. So if you want to learn more about any of this, just head over to our website at the link down below. Again, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. You can also head over here to check out our other videos. Thanks so much for watching, and see you in the next video.